I head up the Buzzacott corporate finance team, and welcome to our first midday on a Monday. What we're hoping to do in these weekly morning, everyone again. What we're hoping to do in all these weekly sessions is answer as many questions as you've all our clients have got about all the issues that are going on at the moment, and we probably won't be able to answer them all. It's a rapidly changing world, and so fire them across, and we'll do our absolute best to get back to you. So for any of you tuning in for the first time to see us, we're basically, I head up the corporate finance team at Buzzacott. Buzzacott's a 500-person firm in the City of London, all in one office, but now we've got 500 offices around the country, most in the southeast. We've got various specialisms, not-for-profit, US tax, financial services, tech and media, and the like. As I said, I head up the corporate finance team. I've got the rest of the team to answer all the questions, so hopefully I'm not going to do all the talking. I won't specifically introduce them, but we've got Andy, Anne-Louise, PJ, Mira, and Alex all supporting in the background, and we'll flip through all of them in a second. So I'm going to spend the first 30 minutes or so giving you a quick backdrop as to the hole that we're in, or not, depending upon your perspective, and then the second 30 minutes or so answering the questions. And so why is it midday on a Monday? Well, what we wanted to try and do was try and create a reference point for. Sorry, I'm just hesitating here because I'm playing with the technology, trying to get my screen to work, but it's not working. Try and create a reference point for for every week that went by, and in terms of where we were. I don't know if you can all see my screen. There we go. Now I've just got to try and work out how to move it along. It's bit of PR stuff about us. Our vision is to build relationships with our clients for long term, not just for a transaction, but to guide you. And the relationship thing is important. But anyway, 12 p.m. on Monday, the 9th of March, taking us back. It was only 2 weeks away. 2 weeks ago, the FTSE 100 had just fallen 500 points to 5,960. Interest rates were at that stage were at 0.75%. Just 48 hours later, they were chopped to 0.25%. And then there was a budget to come on the 11th of March. And although we didn't know about the budget at the time, it gave £30 billion of extra sort of funding because of this coronavirus stuff. A week later, the FTSE was down at 5,200 points. Interest rates were still at 0.25%. And then we had a Treasury announcement, which came, I think, on the Tuesday, and the 30 billion, which the Rishi had slightly underestimated, all of a sudden became an extra 330 billion. So where we are today, 12 p.m. on Monday, the 23rd of March, or 12:06, as my notes said, and I think I've got it about right. I know, a bit flip fast. FTSE 100, currently we're at just under 5,000 points. So it hasn't actually been too bad over the last week, but it's 4% down. But what has happened is interest rates down to 0.1%, and there's 200 billion of quantitative easing. And just for those of you who aren't fully familiar, in the whole of the 11-year run up from the credit crunch in 2008 through Brexit, through all the other issues we had, we put out 445 billion in quantitative easing. So the 200 billion is a significant amount, but that comes on top of the 330 billion, and that comes on top of as well the announcements that we had on last week from the Chancellor, which is basically he didn't actually put a number on exactly how much it's cost and exactly how he's going to do things, but it's going to be an enormous amount of money that they're pumping in to keep the businesses going. So in terms of diving into some of the things that the Chancellor has been talk about, we've got PJ and Alex going to talk about bank and access to the bank data. We've got Andy is going to talk about VC and P markets, because there still are opportunities in there, and we've got Anne-Louise and Mira are going to talk about some of the employee things and some of the other options available. If I get this right, what I'm going to do though, before we do that, is hopefully hand over to Mira, who's going to have a hopefully you're going to pop up in a second, Mira, if this all works. Excellent. Who is going to have a talk about how some of our clients have been affected over the last couple of weeks. So hopefully over to you, Mira. and hopefully we'll be able to hear you.
Yeah, so I think can you guys hear me? Yeah, I'm on mute now.
We can hear you.
Yeah, so I think in terms of how all the entrepreneurs we've been speaking to have been affected, I think it's safe to say everyone has been in some way, shape or form. I think if you look back to say a week ago and in the period before that, everyone was very much focused on their business continuity planning, and that's where their heads were at. I think now where they've started to digest how it's been impacting and will impact their business going forward, their questions very much have been around cash. How do we retain cash? How do we access cash? And how could we possibly be forecasting going forward? And we will, during the course of this, answer some of those pressing questions. I think what's been sort of unfortunate reality has been many have been considering redundancies, have had to affect some. Hopefully what the government have put in place, which Anne-Louise will touch on later, can help mitigate that, at least minimise the number of redundancies going forward, and a lot of that can be backdated going back to 1st of March. On the sort of more positive side of what we have been seeing is really the true innovative nature of the entrepreneur. So, you know, a rubber manufacturer up in the Midlands, they tend to manufacture rubber for a variety of purposes, but actually are focusing on now pivoting their supply for hospitals, you know, meeting where the demand actually is now, and that's really good to see. You know, others, a video content production business, looking at, you know, okay, how can we help brands actually communicate around COVID-19 and what can we do about that? So I think that has been really positive from what we've seen, but just to summarise, I think it's really cash and forecasting and how they interlink have been the big questions from the sort of word on the ground.
Cool, brilliant. Thanks, Mira. So just, you know, as we talked about in that, we talked about you know, cash and the like, and therefore what I'm going to quickly do is seamlessly I'm going to pass over, well, nearly seamlessly, you know, to PJ, and PJ's gone for the blur background, by the way, so any feedback on blur backgrounds, please just you know, let us know whether we think it's a good look or a bad look. But anyway, here is PJ, and he's going to be followed by you know, Alex, just to talk about the banks. And PJ, I think you've been talking to various of the banks over the last you know 2 weeks as things have been changing. So if you want to give us a backdrop as to what their thoughts are, and then we can talk about the bank lending scheme.
Yeah, so been having a lot of conversations with the banks, and I think their overall kind of rhetoric at the moment is that they're really concentrating on helping their existing clients and trying to do you know, what's necessary to get them through this period. There's a whole range of things that people are considering doing, such as the repayment holidays, you know, and things along those lines. There are also a few of them that are using this as an opportunity to where maybe some lenders are closing off maybe slightly to new business. Some are using it as an opportunity to really win and grow their books. There's been a few I've been speaking to along those lines, and so I think there is scope to get, you know, additional funding if you guys need it. I think there's a few conversations we've had on the back of that, though, that there needs to be a use for the money.
Yeah.
So if you're looking for more funds, then actually you need to have a proper use rather than just I want more cash just to see me through this. So if you've got £1 million of cash sitting on your balance sheet and you're asking for $1 million more and you're just saying it's coronavirus planning, I think you need to be a bit more intelligent about the way you phrase that and what the actual use is. And so we've had a few conversations with clients, just educating them on the ways forward. I think specifically on the kind of business interruption scheme that's coming out, there's still a decent amount of uncertainty from the banks as to actually what this is going to look like. And a lot of them are releasing internal guidance this week, you know, around, you know, some of the questions they've been asking and posing to me is, you know, how long will this government guarantee last for? Yeah, and I think the overall thing is actually it's going to be like any normal process. So applying for this scheme is going to be like applying for a typical loan from a bank, but the difference is that where I think it will increase their risk appetite somewhat, is in terms of where there's no security there before, there's no fixed assets, or there's minimal debtors, for example. It gives them a bit more security over actually will they be able to get their monies back. I think on the back of that, and Alex is going to talk about this as well, is that you need to show that you've thought about coronavirus from a forecasting point of view. How much detail have you gone to over the next 3-month period to show that A, you can survive that, and then B, is your forecast for the next 3 years, does it show that you can actually repay the money? Because I think that's critical. It's not just a loan that you can ever repay. The lenders still need to see that you're in a position in the next 3 years to repay that money.
Cool. Yeah. So I'm now going to bring in Alex if we get him on. There we go. Alex. So for everyone's benefit, Alex leads on our financial diligence side of things and has done lots of works historically and will be doing more work going forward with the banks to help them look at the businesses and understand. So Alex, what's your sort of advice for clients who are looking to try and access the business interruption loan scheme?
Well, yeah, the advice, as PJ said, the feedback we're getting is the banks think they're going to go through a similar kind of process that they've had before. But in this case, the demand is going to be much higher, we expect, and therefore kind of speed is of the essence. And these processes can be kind of long drawn out affairs, kind of doing the due diligence. And we really want to be able to assist people in getting these loans in quickly and in good time.
Yeah.
And a lot what we're hearing back from the banks as well is that planning this properly and well, and understanding the impact on your own business will really show that the management are able to be capable to understand what is happening and navigate through. And yeah, PJ touched on it. The key we think is going to be the 13-week cash flow, and and have the 3 cases. So you've got your standard business case, and this is how the business normally runs, and then this is the downside case of what's happening now with the coronavirus, and then the downside case with management implementation of mitigating circumstances. So on the kind of delayed VAT opportunities and the PAYE, and this will build the whole story and that leads to the sources and uses of what the bank will want to see.
Cool, excellent. And then I suppose, PJ, if you want to take yourself off mute as well, just to bring in, I suppose as a Buzzacott, we're business owners ourselves, although we're in a very strong financial position. When I'm thinking about, I go back to, I've had a few more grey hairs than I've got more hair than you, Alex, but I've got a few more grey hairs. That's okay. I've got a few more grey, and going back, it's 10 years, the credit crunch, where there was a problem where there wasn't enough money to go around, and the government were incentivized. And the real challenge I see here is that if the banks sort of treat and behave in the same way as they did before, it's going to be really difficult for them to put out money. And PJ, might be better for PJ to answer that than whether we've got any sense that the banks are going to behave differently. But things might change tomorrow. Who knows?
So I think I think there's still an appetite from those guys to put money to work. I had a conversation with one of them today. He said, look, we've still got to make money at the end of the day, so we've still got to get money out the door to good quality businesses. Their main focus is on, they have to, whilst this government support is in it is kind of there, they're always going to be judged on hindsight, so they need to still lend to strong businesses. And one of the key things one of them said to me today was just that have management thought about coronavirus and to what extent? So I said, for example, is doing a 13-week forecast necessary? He said not really, but if they have done it, that's the difference between us saying yes, okay, fine, these guys are really on top of it, they're going to get through the other end, and because of the detail they've got into it. So I think they're still looking to put money to work, but I think the businesses that are looking for money really need to have thought about what the proposition is for the bank, and almost make the decision easy for them, and ticking all the right boxes as to what exactly they're looking for, and making it, as Alex said, making it a swift process so you can get the money in quickly. Because typically, previously, if you'd said to me, "I want to raise some money," I would have said, "Okay, fine. Bank debt. This is going to take 2 to 3 months to get sorted." If we're starting from standing still, I think there is a lot of stuff that the conversations we've had, things that we've got in the background where we can really expedite that process, and so they're still looking to put money to work. I think, as Matt said, it might change, but they've still got to make money at the end of the day. So if we make it easy for them, the money is there for the good businesses to get.
Cool. Thanks, PJ. And probably I'm sadly I'm slightly sceptical, sadly, that if you're a business out there waiting for a loan from this, it's going to take a while to come through. The banks have got their processes to do. There'll be loads of businesses that are going to want it, and they're just there won't be enough people working in the banks to to do it swiftly. So there are going to be issues around there. So I think the money will come, and it will take a while to get sorted through. Obviously what we're doing, and the reason we want to do these things every Monday, is to keep everybody updated as to what is happening out there. Equally, if things happen quickly and we find out, we might well find out today exactly what the banking criteria is. We will we'll let you all know. So I'm going to hand over and ask Randy. We'll come back, and please do. I hope that there's a chat function on here somewhere where you can ask your questions. So please do fill them out. I think I can filter them out, so we only put the ones that are appropriate to answer on the screen. So if any of our colleagues are watching, so we don't need any inappropriate questions. But so I'm going to move over to Andy, who's also gone for the blurred background. So Andy is one of the senior guys in the team, and has got a speciality. One of his many specialisms is focusing on the VC and PE markets. And Andy, over the last couple of weeks, have been speaking to those guys, because although they're not necessarily at the forefront of many people's minds now, and most people are in sort of more disaster mode as opposed to looking forward, there are still plenty of opportunities in that space if you've got a good business at your core. Andy.
Yeah, definitely. And I think that I'm going to predicate this discussion on the basis that the world is moving very quickly. And actually, if I rewind a bit like Matt did at the beginning, back 2 weeks ago, we had a deal with private equity firm we were looking to complete, and that was actually being pushed along heavily by the budget announcement coming out, because the expectation of entrepreneurs relief had been changed, which came to fruition. But that deal currently is in a holding pattern. That's in status, and the reason for that is, while firms still have money to deploy, in terms of putting cash out the door to existing shareholders at the moment, what we're kind of seeing is a pause and a breathe in the market. So people are still looking at new deals in the private equity sector, but what they're doing is they're just trying to understand what the environment which they're investing in is, what the outcome of this will be. So it's things will come back, and I think a lot of the deals where if people are still looking to transact, if going to a private equity firm at the moment for a cash out type deal, I think people will look at that. There's pipelines to be available, but actually those deals will probably take a bit longer to complete, because everyone needs to understand the scenario and really understand what the basis of a business and how it's going to be trading will be going. Now, actually, if I offer a juxtaposition against that with our more venture capital, the more growth deals. So where I say actually talk here is still it's a firm putting money out the door, investing into a business, but rather than taking shares that already exist and money's going out of the business, actually in this scenario, money's going into the business, and that money's going to sit in a bank account and it's going to be used for growth. Now, actually, these guys have got a different view on it, which is they're still investing actively in businesses, and it becomes actually a really good option for clients. And what we've got is, I've had conversations in the last few weeks with a number of businesses who have either been thinking about raising growth capital because they've got some plans in which they want to grow quickly and they want to use that capital to accelerate growth, Or alternatively, actually, maybe they haven't been as much considering it and been thinking about something else. This is a really good route of funding in this time. So coming back with the uncertainty around various loans, actually, the scenario of taking some growth capital in, it offers twofold. So one, don't forget this money doesn't need to be repaid. So actually, it's money in the business where there doesn't need to be a repayment plan. There needs to be a growth plan, but not a repayment plan. So actually, some of the money could be used to cover costs in the short term, allow the business to ride out. And there's very much a view, again, I think in the market of those businesses, and this is definitely our view, that are strongest and will come through this time. Hopefully, actually, we're best positioned to take advantage of opportunities that come out the back of this. Mira mentioned some of the pivots that are going on. And actually, if then there's a pot of money available to that business as we come out of the back of this, they can accelerate, they can start their marketing efforts, hiring whatever it'll be more aggressively, and actually be able to move along much quicker and grow. So those guys are very much putting money out the door. A lot of them have already raised their funds, so they've got money in their bank account. And if we're being honest, they've promised a return to their investors. It's a long-term horizon. So again, don't forget with these scenarios, a lot of these investors, they're investing for 3-5 years, and therefore actually the short-term impact, as long as the business is going to be still a growing business and stronger in the long term, there's a very good business case for them to make investments. You know, some of the conversations I've had with guys in the market are they're also aware that, you know, time's quite critical at the moment, that a lot of businesses want to get this money in door as quickly as possible, and they're happy to look at things and move quickly on the interesting businesses. So I think we're going to see a lot more of our clients move in this direction from the conversations I've had. And the last point I'll probably actually make on it is taking this in does change the dynamic of the business, and it does dilute down the existing shareholders. But actually, that dilution really only comes into impact if the business is growing quickly, and therefore being able to use the money to grow quickly is important. Actually, having a say a pre-money valuation, the business is worth before it takes money in, of £10 million. If that business has raised £5 million, it's now worth £15 million on a post-money basis because it's got £5 million in the bank account to add to what the business was worth before. So actually, the shareholders at that precise moment in time have the same value of shares that they had before without taking any debt or anything on the board. So that's what we're seeing in the market from that side, and that's probably enough for me.
That's great, thanks, Andy. And I think I see a couple of questions coming through, which we'll come to. So I think cracking on, moving on to probably Anna Louise next. Hi, Anna Louise.
Yep, hello. Hi.
So, and at the same time, I'm going to try and do a bit of producering and switching between Anna Louise and a very fine presentation, which hopefully you can all see there, which I will thank my colleague David Jarman for his excellent skills last night for pulling this together. I think Anna Louise is one of the members of the team who works a lot on the employee side of things and employee ownership, which you know, we might see being more prevalent over the next few months and years, and Louise, given the entrepreneurs relief change in the budget. But I think one of the things that you were just going to just make people aware of, what was just talking about the furloughing as such. But I think before do you want to shoot on?
Sorry, yeah. So I think we've seen that government support has been significant, and a big part of that has been the coronavirus job retention scheme, which people probably have heard of. So the government have offered to support furloughed employees' salaries up to 80%. That is capped at £2,500 per month per employee. So for sort of more senior staff members, higher paid staff members, obviously it's not going to fulfil the whole 80% of their salaries. But all UK businesses are eligible for this. But it is only for furloughed employees. So those are conversations you need to start to have with your employees. They need to be made aware that this might happen. They cannot be working in the business while they're receiving this money. And the grant will only begin when they stop working. The way it's going to work is that you're going to be able to submit the information to HMRC, so employee details and their earnings, through a special portal, which is yet to be launched, and we'll provide more information on that when the time comes. Initially, this is going to be backdated to the 1st of March, and the plan is for it to run for 3 months. But we will see that being reviewed as and when circumstances develop as this progresses.
And interrupt, because there are various questions around this, and I can't help myself but ask questions before our time. But I think one of the challenges as we speak right now is being certain as to exactly what the 2,500 covers. And one of the very common questions is this 80% of someone's salary up to sort of 37,500, which is sort of the £30,000 of the 37,500 at 80%, or does that include employers' national insurance and pensions and any other costs? And do we have an answer at the moment?
In honesty, at the moment we don't have an answer, Matt. It's something we're keeping an eye out for, and we will update on in the coming days. We're hoping we might learn more today. We have our HR consultancy team and our payroll team also very much involved in this and keeping a track of what's going on. And we will probably host another webinar, including them later this week or next week, when we have more information about how to implement it.
Yeah, no, I think as I said, it is one of those. It's a moving feast, but I think my take on the furloughing is that you've got to, if you are going to do it, and many I've got a client who has got a layoff clause in their contract. Most clients don't have layoff clauses in their contracts, and you do need to get the employment lawyers involved. It's not a straightforward thing. I think also, Anne-Louise, I think the other bit you and I were talking about the other day was just about it's you've got to do it. It's almost like treating it like a proper redundancy process, and therefore you can't just pick and choose who you want to furlough. And actually, I think one of the questions we've got on the side was about whether the employee can choose to furlough. I don't suppose you know the answer.
I'm not sure at the moment, in honesty. I think they've definitely got to be designated as properly furloughed, and I'd imagine that choice would come from the employer at the moment, but I don't have clear guidance on that. But it is something that open communication should be started as soon as possible. It shouldn't be something that sort of crops up and is a shock to employees. These conversations should start now, and like you said, getting a handle on the contracts, getting the lawyers involved, and getting the specialists involved is really important at an early stage.
Cool.
But we are seeing some other questions around, if you have got the 2,500 provided, if these people are properly furloughed, how can I top that up? And you can top up yourself, that is possible, but there's also obviously cash constraints at the moment, so we've been looking at other options available to people to sort of bolster the salary cuts at the moment. And one of those sort of recommendations we're making is to look at EMI schemes. They have sort of been successful previously, long before
is this for the senior employees who
particularly those senior employees for whom £2,500 is not 80% of their salary, or not close to 80% of their salary. EMI option schemes are a great alternative solution to sort of top them up without having to fork out cash at this stage. It's a great way to sort of get people committed to the long-term goals of the business as a whole, as opposed to sort of individual short-term objectives, which I think is quite relevant in this current environment, when we've got to get through this period together and then hopefully come out the other side with a more robust, successful business overall. And it's a great opportunity for people to benefit. Also, with business valuations potentially being a bit lower at the moment, there's a greater tax benefit to be had from a low valuation at this point when you implement the EMI options to when a potential exit or exercise event might happen.
Cool, brilliant. And I can see that there are various questions coming through, which we will endeavour to answer. But as Anne-Louise, the good thing or the bad thing about our corporate finance team is we know a little about everything, I think, is the phrase. And the benefits of Buzzacott is we've got a great teams around us who know the absolute precise details. And so what it might be is we might take your questions and then get Doug and HRC or the payroll team to come and do some more specific answers. And so thanks for Anne-Louise. So right, here we go. Mira. Back to you again. Are you still there, Mira? Oh,
Yep.
Oh, you moved. I'm trying to click on the right screen so I can make Mira magically appear in the right place. So we're back round to Mira, and I think what Mira you were going to talk about was just some of the other things available to clients. And again, we've had various questions here, and hopefully everybody can see the lovely slides that David's prepared for us. Do you want to just crack on, Mira, and just talk about some of the things within that?
Yeah, absolutely. So there've been a whole host of other measures as introduced by the government. I'm just going to touch on some of the important ones not already covered by the guys. So first and foremost, time to pay. You know, if you aren't able to or think you won't be able to meet your tax liabilities, particularly PAYE, there is a dedicated HMRC helpline to discuss that, and that is very much on a case-by-case basis. What our colleagues in the wider firm have been advising us is get that application in, get that sort of phone call in ASAP. You know, don't delay. I think they're going to be inundated with questions and queries, so try and get on the phone to them as soon as you can. Hopefully it'll be a sort of a friendly HMRC officer on the other side. But you know, that usually in our experience is agreed on the phone. So hopefully, even if you have to wait a period of agreed slightly different payment plan for going forward. You know, and I think that's really important for, say, what we don't know yet is for those who have recently made payments and think they have been affected by it. I think it's worth bringing up when you're on the call.
My computer glitched just at the wrong time, which is really dangerous when mine's glitching because the whole thing might fall over. Are you talking about just, is that VAT or PAYE? Because VAT, I think you don't have to do anything. Am I right in saying that?
Yeah, that's correct. So I'm talking about PAYE in particular.
Excellent.
Moving on to VAT, as you mentioned, Matt. So that the VAT that will be payable basically from now until the end of June is being extended to April 2021, and no application is required for that. That will be automatic from the government. The other measures we are seeing, which are useful, and definitely please do take advantage of this. I think it's worth just saying as a kind of overarching point, our suggestions are all these things, you know, where you can apply for these and put them in place, because everything is just going to have a positive cash impact for you to try and negate some of the difficulties you guys will be seeing. So on income tax, for example, the next self-assessment payment, so those would be payable on 31st July of this year, are going to be deferred until January 2021. I think there are some specific nuances there where you may have already paid more than 80% of the tax you owed in the January period, but we'll be publishing and coming out with more details from our tax colleagues on that front. But I think it's just something to have on your radar where you are paying income tax, that you can have that benefit of a delayed payment on your self-assessment. Other things then, sick pay. So I think there's a really good benefit there of 2 weeks of statutory sick pay that the government are going to be providing for any of your employees impacted directly by coronavirus, and that would take place from day one of sickness. And then in terms of what's been provided for specific sectors impacted, so retail, hospitality and leisure, as everyone has rightly recognised, are going to be sadly, you know, more heavily impacted by this, and therefore the government are focusing a lot of the additional grants on those sectors. So business rates holiday for those sectors impacting the 2021 tax year. No action is needed. You will not be paying business rates. But if you are interested in seeing what you would be saving, and this goes back to the sort of forecasting point mentioned by PJ and Alex earlier, there is the business rates calculator for those of you who aren't aware on the government website, so you can actually calculate what savings you would be making for this coming year and build that in, adapt it with your financial model, and you know, that's something we'd be looking at when we're forecasting for our clients. So the other point on cash grants for the same three sectors, that would be a cash grant of up to £25,000 per property, and that depends on your rateable value. So there's a slight cap if you've got a smaller rateable value. Your local authority will be contacting you if you're eligible for that. But I think, again, worth having on the radar, no action needed, but something you should definitely be taking advantage of. The final 2 points I wanted to cover was, firstly, on insurance. If not already done so, and a lot of our clients have been doing this as part of their immediate BCP work, is go and check your insurance policy. So if you are covered for pandemics or government ordered closure, you should be covered, obviously provided other normal T's and C's are covered. And obviously that was announced from 17th of March. So any sort of costs you're incurring after that period, there will be some benefit provided there. And then the final point was, we talked about a lot of support the government's announced. There are obviously other areas, other businesses impacted, which the Chancellor as of yet hasn't announced support on. One of the things Rishi mentioned on Friday was there will be further measures to help medium and large businesses to be announced. So I think it's worth saying, if some of these areas don't necessarily meet your criteria, or you slightly fall out of those sector groups or turnover size for the business interruption loan scheme, for example, there should be other measures coming. So kind of watch this space, and we'll be advising on that as and when we know more.
Cool. Okay. So hopefully that gives everybody, thanks Mira, and it gives everybody a sort of an overview. I know there's only so much depth we can go into in sort of half an hour or so about these things, but it gives everyone a good feeling where we are. We've had tons of questions coming, and we're not going to be able to answer them all because there are something like 45 questions. I don't know what happens when you put yourself on a video. Everybody asks a question. You stand there and you do a seminar standing up, and you get one question. Everybody wants to disappear off. And so what we would, and if we can't answer your question, please do go onto the Buzzacott website and email inquiries@buzzacott.co.uk with your question. And if we can't as a team answer it, we'll get one of the other team members from the specialist area to try and answer it, or we'll just let you know we don't know the answer yet, and we'll get back to you as soon as we do know the answer. But probably, and the very first question that was asked, and so I'm going to throw this one at PJ if PJ's ready. The first question it asked is when will the business interruption loans be repayable? So do we have a view on that, PJ?
So the current guidance is well, it's down to the lender, but their term is for up to 6 years, and so you can ask. It's going to work as a normal loan. It's just guaranteed. The guarantee is there by the company. So if depending on what the use is for, you can ask for up to 6 years, but it'll be down to the lender how comfortable they are. For example, they might think that 3 to 4 years is where their risk appetite is. So it'll be case by case, but it's up to 6 years currently.
Cool, excellent. Thanks, PJ. And sticking on the same subject, another question about the loans, and I might know the answer, but I'm going to ask you just to see if you know, is about whether the banks are allowed to seek security or personal guarantees. I.e., if those the individuals are wealthy or they've got lots of security before the bank can revert back to the government 80% guarantee.
So based on the conversations I've had is that the government is a backstop, and actually the business and the directors are the first point of call, and so it's not in substitute for any sort of other guarantee or security that the bank can take. So I think my answer is yes, that they still can ask for personal guarantees. As always, personal guarantees are negotiable, and you just need to have the right conversation with the lender and just say, look, if you don't have anything to give, this is pointless you giving a personal guarantee, then that's the line you take. But at the moment, it's not solely the government at risk.
Sure. Okay. Thanks, PJ. And then there's another question which I think I'll again sticking on the same subject, which I will answer about businesses that already have significant bank loans, and will they have any impact on obtaining a loan? I think going back to what Peter said, is logically, it shouldn't. If there is and this is my sort of skepticism right now about these loans, if there's a bankable case, then the bank will lend it whether you've got another loan or not. My skepticism is as to whether there will be enough bankable cases, properly bankable cases out there. And we touched on the 13-week forecast, but many of the clients that we've worked with would struggle to put forward a 13-week forecast that is properly reliable and the like. It might be that, and a bit like I think in the audit world, the FRC are talking to auditors about having standardized assumptions about coronavirus over the next 3-4 months. It might well be that the banking world does exactly the same and says you've got to do your forecast assuming A, B, C and D happens. And if you're still if you're within those parameters and it's a bankable proposition, then they'll lend. I'm also sort of, part of me hopes that the banks will be able to look historically, and therefore if you've had a business that's made £1 million profit for the last 2 or 3 years, and this year is going to make nothing or lose money, that they can look at the past 2 or 3 years as opposed to this year as the lending proposition. And then finally, for those businesses who are in the medium strong position, though I don't think there's many people in a properly strong position unless you're sort of a retailer, and like although there are some, we do have some clients that aren't doing too badly. But what we did last time out back in 2008 with some clients was use this sort of government guarantee bit and sort of the enterprise finance loan guarantee, I think it was at that stage, as part of a package. So refinancing completely with clients to get overdraft invoice finance, have maybe a normal term loan, have this sort of guaranteed loan as well, but trying to blend the overall risk and cost of it to get as much money as possible to enable to supercharge the business. So one can look and start using these things creatively, although again, we're not, there is going to be a shortage of money out there, and I think it's not about abusing the system necessarily to try and get as much as you physically can do. But if it's very cheap money, and contrary to the VC and PE markets, if there is a free flow of very cheap debt, let's try and try and take it. I'm going to throw this open to everybody, so you guys can wave at me if you want to answer it, as I know you're all on mute right now. And we touched on a question about, we know who the struggling sectors are. Which sectors are showing that they've got growth opportunities in all of this? So anybody want to put their hand up? No. Oh,
yeah, I will.
Okay, go for it, Andy.
Self-evident, healthcare's doing quite well, but then anyone ancillary to that. So we're seeing the case with people who are doing, say, healthcare recruitment is obviously booming. Suppliers of equipment to the healthcare sector, manufacturers of various items, all going to be doing quite strongly at the moment. There's also the trend that I think we've seen on a larger level, those who are working with online cloud-based solutions. So we've got a number of tech clients who are working from those side of things, and they're actually seeing a fair boom as people are looking for new ways to work. So anybody who's offering kind of a B2B SaaS business which allows remote working in some sort of way, and that's not necessarily just saying something like Microsoft Teams that we're using here. It's down to we've got a client who just closed out just before this all started a £3 million equity raise. They work in the property space, engaging communities on development, and actually in that world they're seeing a lot more engagement because people can't physically meet to discuss all these planning projects. So a remote planning tool is doing really well at the moment. Other sectors, we've got a few that are in the gaming space. That's obviously going very well as people with their free time have got more free time and looking ways to spend their time and money. So they're all doing quite well, and that's there's anything that generally is the case of a counter-cyclical business, whereby if a times change, we'll do well, but it's a bit more nuanced than that. But those that are also capitalising on what we're seeing in terms of our daily lives changing, I think it's doing quite well.
Cool, brilliant. And anyone else, or was that Mira waving at me? Should be waving at everybody in a second. There we go.
Yeah, the only thing to add to what Andy was saying there is, you know, where we are changing, as he said, the way we are doing things and our buying habits. I mean, just anecdotally amongst friends and family, etc., the number of online shop orders has been absolutely booming. So I think, you know, one of our clients who works in cosmetics industry, and you know, only a small portion of their business has been retail to date. So they've been quite fortunate, because actually even demand from Asia, they've obviously seen the impact of early stages of it happening in Asia. They've actually seen almost an increase in sales over that period. So I think those guys, businesses like that, are really doing well. Although, as I said right at the start, you know, there's rarely any business that isn't impacted in some way, but they're certainly mitigating it quite significantly, in where you can show that you're pivoting slightly in the face of it. So you know, not necessarily, you know, changing what you're producing or changing how you're branding yourself. So if there's more of a focus on kind of health, well-being, we're seeing a lot more companies sort of highlight that area if they were doing it already, or slightly tweak what they were doing, you know, skincare products, you know, how to relax at home because you can't do that in other ways, you know, and those kind of things are also what we're doing.
Cool. And I think that just, again, our advice to to businesses in these situations, and we're sort of lucky as a corporate finance team, is a lot of the businesses we work with are always in a state of change and advancing and doing new things. And I think the advice to, you've got to look, strongly and carefully at what you're doing. And if it's not working, okay, there is loads of support out there. And I think, we're going to be very lucky over the next few weeks to make up for the general bad luck. But you've got to think about your business. So, for example, our bread and butter at one level is helping entrepreneurs sell their businesses, and that's going to be something that's going to be very difficult to do, definitely for the next 3 or 6 months. So we've got 2 transactions going on at the moment, in 2 decent transactions in sectors that aren't going to really be affected by this for one reason or another. But you've got to, as the entrepreneur, you've got to think about your business and adjust it, and and look at different audiences, look at different markets to try and grab it, and hopefully, and I'm a great believer, when we do get to the end of this, and sadly it's not going to be quick, we're probably going to all be sitting here maybe doing this every Monday for the next 3 months or something like that. But when we get to the the other end, there is going to be a boom, a very big boom, because there's going to be lots of people who haven't spent a lot of money, and hopefully the wheels are going to get turning pretty quickly. So picking up on that, I'm going to move on to probably the area which most questions are about. So I'm just trying to scroll through to find some appropriate ones, which is about the furloughing of employees, is probably where, and I'm not sure we're going to be able to answer them all. Shall I get you back on, Anne-Louise? You there, Anne-Louise?
Yeah, I'm here. I'm back here.
Cool. So I'm just going to, as I haven't got anyone here organising the questions into a logical order. So job retention scheme. Does the employer have to cover the additional 20% of pay, or the amount in excess of 2,500 for higher earning employees as a requirement of obtaining the funding? Anne-Louise, do we know the answer? It might be someone in Buzzacott knows the answer to that, but do we know the answer to that?
I think for the moment, our understanding is that no, that's not required. The 80%, obviously, the result would be the employees would have sort of less to take home, but there's not a requirement to top that up to the full salary amount.
Yeah, I think I agree with it. But I think the changing of someone's salary is the change of their employment terms, and they need to be acceptant of that change.
Yeah.
I think is the way that I see it. So you can't just force it on them.
Absolutely. So the whole job retention scheme, the terms and conditions of employment contracts need to be considered as part of that, and I think that's actually a question we've had come through as well. So it is something that needs to be looked at. What are the terms and conditions? Can you furlough your employees? And actually there might need to be conversations and negotiations made about existing contracts, because if it's a matter of somebody being kept on at 80% salary and having, you know, a job to come back to, or actually having to be made fully redundant, you know, there might be a conversation to be had there about finding a compromise.
Cool. And then keeping you on the spot, how will the scheme work for those employees with irregular earnings or on 0-hour contracts?
This is a question we've had a few times already, actually, from clients. We don't know at the moment. The details you have to provide to HMRC through this portal, which is yet to be revealed, is details of the employees in terms of who they are, national insurance numbers, all that sort of thing, and their earnings. So whether it will be looking at the average earnings or whether it will be basic salary, whether it will include national insurance and pensions, we don't know yet, but we're hoping to receive that information in the coming days, and we will provide updates as soon as we have it. Cool.
We've got someone asked a very long question about minimum seniority, which we will try and come back. Shall
I have a look?
It's quite a long question, which in fact it's several questions in one, so we'll try and answer that one separately. And one of the questions that has been asked, and I should have said right at the beginning, is I hope, if I've got the technology right, or Sean, our very able IT director, has, this is being recorded, so we'll be able to put it out there. But possibly more importantly, what we're hoping to do post this is send round a summary of some of the stuff that we've talked about, you know, with the caveat that, and the reason for doing these things verbally is that the world changes very quickly at the moment, and you know, we're doing our best to try and keep up, but we'll circulate that around it. And again, the objective, and I don't know whether it was one of our lovely Buzzacott colleagues or someone said, are we going to do this every week? If so, I want to put it on my LinkedIn. Assuming it wasn't someone at Buzzacott, we are planning, if the feedback is right, to do this every week, and in the future hopefully we'll be able to go into more depth and detail on some of the elements. So sticking on, so someone's, you know, can you furlough all the staff members in a team? I don't see why you can't.
Yeah.
But I think that the furloughing, and it is a legal concept, and I'm sure any of the lawyers, if there's an employment lawyer listening, they're probably despairing at us right now. But it's a process you've got to go through properly. You can't just say, oh, you're furloughed, you're laid off. You have to do it.
Yeah, absolutely. The changing of that status to furloughed is subject to employment law, so that does need to be taken sort of seriously.
Yeah, so
and properly communicated.
If you are going to furlough someone, you want to start that process now, because I don't think you're going to get the money.
Absolutely, we're not actually expecting that for the money to be received in relation to this for at least a month, probably until May, to be honest.
Cool.
And so there will be a lag.
And another question: the furloughed employee, can they return to work following the furloughed period?
I think that is precisely the intention. So the plan for this is to avoid laying off employees where possible, and keeping them on in this period where they're not required to work, and then return to work once it's sort of business as usual again.
Cool. And then probably a final question on this subject, and I'm conscious of time. What happens if an employer goes bust while taking advantage of the job retention scheme?
I'm not sure at the moment, to be honest, Matt. I would think it would cease. And looking at other options and welfare support. I don't see why it would continue, because they wouldn't technically be furloughed anymore. Yeah. But again, I haven't had strict instructions on that. That's just sort of my understanding of how it would work. Fine.
Okay, so another question. Probably going to move over to Mira now. Is Mira, this was on your sort of tab of things to think about. I assume it's could you clarify whether the PAYE is a delay or a reduction?
So that's a delay. There's the time to pay sort of scheme that's been in place prior to this whole pandemic, and that's effectively a means by which you can have a conversation with a human on the other end of the line at HMRC to say, look, I just need a bit of breathing room for cash flow purposes. Can we discuss some way, shape or form I can move around my payments in a different way, specifically for what we're facing at the moment, it is to be used for PAYE, where you discuss again a payment term structure that gives you a bit more breathing room. That will be on a case-by-case basis, but it is absolutely still to be paid, but hopefully over a longer period of time, and that's what that helpline is specifically for. Cool,
excellent. And sorry, it's getting myself. And then, you know, my advice, you know, around that, you know, is, you know, my advice to every client is keep as much money as you can in your business, and yeah, because you never know. Even if you think you're okay at the moment, you've got to, you can forecast forwards. You know, one never knows, you know, what is around the corner, and therefore, even if you don't need to take advantage of the PAYE, what the government, you know, the VAT that they've given on PAYE, you know, that they're not going to look at your, you know, your liquidity or ask for details in your balance sheet, especially not right now. That they're going to ask for, you know, for you to agree when it's going to be paid, and therefore, you know, within reason, you know, if you are concerned about it, you know, I would strongly recommend you make that phone call to you know, to push back the payment, and even if it's for a couple of months, usually they'll agree it for a much longer period. But it's one of those things that it's a, if I was prioritizing, trying to get up the if I can get up the slide bit again, you know, if I was, you know, prioritizing which of these I would be doing, and the fact that happens, you know, automatically. The job retention scheme, you get on quickly and you know, furlough those employees if you know, if you're going to, you know, the PAYE, you know, tax payment, again, that's in your hands, and I would be doing that, you know, fairly swiftly. You know, the business interruption loans is going to take longer. I hope next Monday when we talk about this, I'm going to be proved wrong, and that it's already flowing out the door and businesses are, you know, are getting the money. But it's that sort of order that I would be, you know, I would be looking at as a, you know, to be trying to get my hands on the on the cash. So we've got various other questions. I was looking at my time, it's 12:57, and people who know me well know that I could go on all afternoon, but also I like to, you know, quite you know, stick to time. Team, is there anything that we've talked about previously that I haven't brought up or raised over the last hour that is worthy of mentioning? Any closing comments from any of you? Here we go. We've got one here. There you go, Mira. Over to you.
Yeah, guys. I think the way that we've been talking about it as the team, and the way we sort of see it, is there's the shorter terms, the things you can be doing immediately. All these cash flow points we've been talking about, whether that's getting a model so you can properly forecast and properly look at your business and make those key decisions, and getting in touch with HMRC, putting in place some of these initiatives and taking advantage of those. And I think we've had some questions here saying, well, I've got some cash now, should I still be doing that? And yes, absolutely, because there's going to come a point where you're more cash constrained than you are now, inevitably. So I think, you know, taking full advantage of that, anything you can do whilst the advice is still sort of being confirmed. You know, you can start talking to employees, you can start talking to employment lawyers, get those actions that you have control of at the moment moving. And then there are, you know, the slightly medium to longer term things that you should start thinking about in the back of your mind. So the points on growth capital, Andy mentioned earlier, but also thinking about, you know, how can I perhaps change my strategy? You know, what is my longer term strategy? Has it changed in the face of this? Should I be perhaps looking at something like, you know, and this will depend business to business, but could I be being opportunistic about things like acquisitions? You know, those are thoughts, just food for thought, but definitely things to start thinking about once you've got the sort of immediate cash flow points in focus and under control.
Brilliant, thanks, Mira. So I think on that note we will probably wrap up, but we are it's team for contributing to it, and it's hopefully just a start. And as I said earlier, we can go into more detail in all the areas, but as a whole, Buzzacott is here to help you, the clients, and also for any intermediaries, any banks, VCs, lawyers, watching as well. We're here to help your clients as well, and despite being slightly more disparate than we once were, we all communicate together, and we talk regularly. So if there is anything, and many thanks. I know that there are a lot of questions about the furloughing, and I think one of our immediate actions will be to get the HRC team and the business services group team more actively involved into this. But we will answer your questions. I've got names on some, but if you have a name, please, as I said before, email inquiries@buzzacott.co.uk, and we'll get your questions answered. But I think for now, we'll probably wrap this up. But we fully intend, as long as you don't all give us really negative feedback, to be back here at 12 o'clock next Monday, where we will talk about where the FTSE is, whether interest rates are still positive and not negative, and hopefully how much money Microsoft are making out of Teams video conferencing. But anyway, thank you to all, and hope to catch up with all of you soon. Bye.